Hi there, thanks for tuning in. This is Bill at smarttrades.com, and today is Wednesday, December 21st. It's about 11:50 a.m. Pacific time. And as always, if you'd like more frequent updates, please visit smarttrades.com. I send out about three updates a week via email, as well as intraday updates and commentary and trading tutorials via Twitter pretty much each and every day. Again, that's smarttrades.com. Let's start off with the S&P. Those of you that saw my last video will remember back on November 28th, I had turned relatively bullish there and mentioned that we might go up and test the 1300 area basis, the S&P. One of the keys was that we rallied through that 1200 area and that the rally from that point continued to be impulsive. As you can see, even on the daily chart here, you can count out a five-wave structure, 1, 2, 3, 4, 5 of A, a relatively corrective choppy pattern for B, and perhaps this is a C wave that we started out yesterday. This chart's a little bit dated. These are charts that I used for my newsletter yesterday. For the most part, there are some updates in here as well. At any rate, that 1200 area, 1220, 1215 zone, which was originally important resistance to get through, has now become support. And so far, it's held, although it's tested it a bit. To be honest, I was actually looking for a possible bottom. I preferred to see it bottom around the 1220 area, and in fact had counted this as possibly complete around 1210. However, we got an ABC rally up, and when I say let's take things one step at a time, this is exactly what I'm talking about. You have a possibly completed pattern down. However, the rally back up is corrective, and you have to update your count, and indeed that's what we did. And the S&P came down. We had a nice little target around 1202.20. I believe the S&P bottomed just around 1202.35 or so. And from there we had not the greatest bullish divergence, but we did indeed have a non-confirmation on the advances. Also, 62% of that entire rally from November 28th comes in just below the 1200 area. And as I've mentioned in previous reports, there's a bunch of swing support and resistance there. So the 1200, 1220 area is quite important. The other thing that has become important here for this particular rally is that we take out the 1230 area. That's it was important swing support, then resistance. But more importantly, that's an area that you could be counted as a series of 1-2s. Here it is in the Dow, and you can see this is an alternate count that I had posted in my newsletter, and you've got a 1, 2, 1, 2, 3, 4, 3, 4 that overlaps 1. That's an Elliott wave no-no, and this is exactly what we were looking for in the report, was the possibility that we would overlap, and if we did, we would negate the impulse wave to the downside, and therefore the very bullish count that a lot of folks are following. Now here is a count that where you can count this decline as corrective for the Dow. It's kind of an ugly double zigzag, but nonetheless it doesn't break any rules. Now there is one possibility here that we had a failure, and if that's the case, it's still possible to count this as an impulse wave down. As long as we don't take out the 12,213 area. Breaking out above that 12,213 area is going to absolutely break this as an impulse wave. Doesn't mean we can't go down, but it means that this particular wave down is not impulsive anymore. And again, I don't think that it is impulsive anyway, but it's nice to look at both sides of the coin, so to speak. Now here's a chart I posted yesterday, and you'll see I was looking at the fact that the Nasdaq had not actually overlapped that key area. It later did, but I don't think it did on a closing hourly basis, and that's important to note. I'll show you a chart a little later on, because the Nasdaq has been much more bearish today than the S&P. Another chart that I had updated here, we were looking at this doji here, if you look at this parallel channel, we put in actually a double doji. I had noted this doji over the weekend. The first one, we actually wound up with an inside day and another doji-like pattern, and from there I had mentioned that if we got a breakout to the upside, that would probably be a buy. Now here is the intraday pattern on a 60-minute chart of the crude oil, and you can see here we had a couple of nice little consolidations which broke out right around the top of that doji pattern in the 94.50, 95 area, which again is the top of that doji. You get dojis at a support area, and particularly if they're narrow ranges or followed by inside days in narrow ranges, they can be nice kickoffs. Now from there, it's important to note we have what sure looks like an impulse wave up. So there's a good chance we're going to come up here and retest the bottom of this potential triangle once again. But from the top of this pattern, there's a pretty good chance that we're going to get at least some kind of corrective decline, because you have the two factors, the possibly complete five-wave structure to the upside, and it's terminating right at the lower end of that triangle. Now again, because it's impulsive, the odds favor that it'll come down and perhaps come up here and retest again, or perhaps even break through. We'll have to take that again one step at a time. We'll see indeed if we get a corrective decline and another impulsive rally first. Excuse me. Bonds, I had looked for called for a top in the bonds around 146. We actually got to 146.11, I believe, the other day, and we have started to fall off from there. The bond count to me is a little bit up in the air in terms of the specific Elliott wave count. However, I do think we're at the top of basically a corrective trading range, and odds favor somewhat lower prices here, at least over the short term. Gold, I think that if you look at gold on the big picture, I think it best counts as a possible A, B, and then we may be working on a C wave here. So far it's followed this pretty well. Wave 2 was a zigzag type of pattern, so you would expect that if indeed this is a wave 4, it should be a flat. We should go down and test that area around the 1500, perhaps 1540 area, maybe even as low as about the 1480 area, but the bullseye would be perhaps 1540, which is where the trend line comes in. If we take out the 1674 area, again, that's overlap on wave 1, that would negate this as a five-wave structure to the downside. The euro, this is again a chart from yesterday. I looked at this as an ABC. We actually put in a long tail up here up above 132. However, from there it has fallen. This pattern indeed does look corrective, so at least on the short term, new lows or retest the lows was favored, and indeed we got that retest today. We may yet make new lows. We'll see. Bank of America, actually a couple little dojis here on the intraday chart. This 130-minute chart that gives us 3 bars a day. I kind of like that time frame. It's not so tight as the 60-minute or shorter. But it gives you a little bit of intraday definition to look at. And you'll see here on the previous test of 5, we did indeed get a doji there, which we rallied from. We had another doji here that we broke down out of on this channel to the downside, and we've got a pair of doji-like patterns, if you will, also around 5, and so far that's held. I do have my concerns about Bank of America, however. I think that it's acting on the weak side, and indeed I think that if Bank of America falls apart, it's probably going to bring the broader market down with it. We had a target in Apple in the mid 370s. It held there obviously and has rallied since. Here's that Nasdaq chart that I had talked about before. The futures actually did go up and overlap a bit with these previous swing lows. However, I think that this count probably counts best as an expanded flat, ABC up A, ABC down B, and then you have a 5-wave structure nicely targeting that 1.62 times A. Again, this is a chart from earlier today, and you can see that nice 5-wave structure, and lo and behold, there's another doji right at the peak at that 1.62 times A target. And, I'm not a big candlestick guy, to be honest. However, I think that dojis and narrow ranges are worth watching. Actually, Toby Crable used them in his work on trading the opening range breakout. He used daily charts, but I think that the message of dojis is that there's it's a range contraction or lack of momentum, and so I think they are interesting, particularly in the context of where they hit a target or are at the end of a terminal pattern, be it a 5-wave structure up or a corrective pattern down. And finally, here's the S&P updated a little further in the day. And again, here's that updated count. We've got A, B, C, X, A, B, C. We've got a 5-wave structure in the final C and an impulse that, perhaps more importantly, takes out that 1230 area, knocks out this as a 1-2-1-2 type of pattern, and so far has found support at that 1230 level, which I think is important. It doesn't have to hold there, it just has to hold this low at 1202 to keep things moving to the upside. So again, the bigger message is, as long as we do hold that 1200 area, I favor a move up to around 1300, ideally 1310. We've got to keep the impulsive structures going to the upside, obviously, but as long as we do, that's my target for now. So at any rate, happy holidays, Merry Christmas, Happy New Year if I don't do an update between now and then. Mili Kaliki Maka, Haoli Makahiki Ho. And again, visit smarttrades.com if you'd like updates between these videos. These videos take some time to produce, some time to upload, and so on and so forth. It's much easier to update in a timely fashion via Twitter. So please visit smarttrades.com if you would like more data, more frequent data as far as what's happening in the market. And also, if you like the video, please click on the like button, the thumbs up button here on YouTube, and let people know that you like it. Thanks again for watching, and again, Merry Christmas and a Happy New Year. Bye-bye.